What is up, traders? Hope everybody's doing well. Lecture 2 of this series. Today we're going to talk about trends and what they are, how to identify a bullish trend, bearish trend, how to identify when a trend is switching from bullish to bearish or bearish to bullish, all that kind of good stuff. So, starting off, bullish trends. What is a bullish trend? A bullish trend is when we have market consistently make higher highs and higher lows. So when we look at the highs that the market is making, each high is higher than the previous high it made. And then when you look at the lows, each low is higher than the previous low it made. This is a bullish trend, right? A bearish trend is a trend that is making consecutive lower lows and lower highs. So you have this low and this low. This one is lower than this. This one is lower than this. And then the highs, each high that it's making is lower than the previous high that it made. This right here is a bearish. I thought I said this is bullish. Okay, so this is the bullish, and then this is the bearish trend, right? So a bullish trend is a trend that is making consecutive higher highs and higher lows. A bearish is a trend or a market that is making consecutive lower lows and lower highs, right? So now that we've talked about what a trend is, I mean, it's pretty basic, pretty simple. Just a market that's making higher highs, higher lows, that's bullish. Lower lows, lower highs, that's bearish. Now, how to identify when a market, what is this? How to identify when a market is switching from bullish to bearish or bearish to bullish. In a bullish market, as long as we are maintaining the previous low, and if we retrace, as long as we retrace anywhere in this previous leg, not pushing lower than the previous low, this is bullish. But as soon as we retrace lower than the previous low and we have a candle close, not a wick, a candle close below the previous low, this is called a market structure shift, market structure break, change in the state of delivery, whatever. There's multiple names. We need the idea here. As soon as we have a trend that breaks this law of making consecutive higher highs and higher lows and now makes a lower low than the previous one and closes like so. So we need a candle close, not a wick, a candle close below the previous low. This is identified as a change in the state of delivery, change in the market structure, whatever. Okay. Vice versa for bearish. We just talked about a bearish trend, something making, or a trend or market making lower lows, lower highs. As soon as we have a candle close above the previous high, this is marked as a change in the state of delivery or a change in market structure or a shift. Okay. Now, very important point to talk about. Not every market structure shift or break means we're going to shift in trend. What do I mean by this? Every market that you look in hindsight, right, and it shifted, you will always see that it started with a market structure shift. So every trend or market that switches trends from bullish to bearish or bearish to bullish, it always starts with a market structure shift. But not every market structure shift means we're going to continue or shift in market. So these are called fake outs. We're going to identify them later. That's not the point right now. I just want you guys to realize that when we're making a bullish or bearish market and then we have a close below, let's say for this example in a bullish market, this is a shift in market structure, but this doesn't mean that we're going to just continue lower. This could just be a fake out for us to continue higher again, to continue the bullish trend, and then maybe later have the real break, right? So this is very important to identify. Not every break of structure means we're going to continue lower. Some could be a fake out to continue higher, but every change in the market structure does start with a market structure shift, right? Let's take you guys Well, before I actually do show you guys on the candles, one last thing I want to talk about is within these, let's say in a bullish trend, and then we have this retracement. Within this retracement, there could be multiple trends. So let's say this is a daily chart, right? If we zoom into, let's say, a 15-minute chart, this retracement could be a bearish trend, then a little bit of switch of a bullish, then maybe come back down to bearish, a little bit bullish, then bearish. Then ultimately, it will make this leg, right? So in a retracement, especially if you're in a higher time frame, you could have multiple trends, or it's not good. You will see multiple trends, right? Bullish and bearish. Same thing in this leg. If you go down to, let's say, the 15-minute, you'll see how it was bullish, then turned bearish a little bit, then bullish, then maybe bearish, bullish, bearish, whatever, right? But then if you go on the higher time frame, you're going to see this one big candle. So within one candle on the higher time frame, and then one retracement on the higher time frame, you will see multiple trends, bullish and bearish, right? That is a point to note. I'm gonna go show you guys now on the charts how these look. So I'm gonna pick a random example from, we're on the 1 hour chart. I'm just gonna stay on the 1 hour chart. I'm gonna show you guys random examples of just easy to spot. Okay, here, right here, boom. So here we can see how price or market dropped, retraced, dropped. This is a bearish trend. And then at one point in time, we broke structure. So if we take this drawing, we can see how market broke structure here with a candle close. See how the candle closed here? This is no wick, this is a candle close. This is identified as a market structure shift, a market structure break. We're switching from bearish to bullish, right? That's the whole thing. We're switching from bearish to bullish, and then we can see how market then continued to make higher highs, higher lows, until at one point it broke structure again. And now went from bullish now to bullish to now bearish, right? So here we broke structure to the upside. Now, after some time, we broke structure again to the downside, and now we're back in a bearish trend. So if I drew this to just show you guys, so here we have boom, 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 right? So if we take this drawing, we can see here how price, it broke structure here, went from bearish to bullish, and then broke structure again here, turned again bearish, and then we can see how price right here, it just continued lower, right? For a specific period of time until it broke structure again, right? So you see here, price came down, retraced, broke structure here, continued in an up bullish sentiment for a while, retraced, didn't break structure, it's a retracement, and then continued higher again, and so on and so forth, right? So that's how you identify a bullish bearish trend, a shift from bullish to bearish. One last thing I want to talk about in this session is, or this lecture, is we have something called intern highs and intern lows. So any trend, bullish trend, right? This is a retracement, continue, retracement, continue. In these retracements, you could have multiple lower retracements. What do I mean by this? So this is textbook, right? In the markets, this doesn't usually, markets don't look like this. What happens is you'll have push up, or let me draw like this. So multiple legs up, whatever. And then on the retracement, you're going to have something like this, 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 right? And then you push up. So if we look at this image, right, we have multiple lows in these, in this kind of retracement. So there's something called intern lows and then swing lows, right? Or if you want to say like little lows and then big lows, right? The major lows is the lowest low in this retracement. So the lowest low is this. This is called a swing low, right? This is what we really usually want to refer to as, if price comes back down and breaks it, that's called a shift in the market structure, right? So a swing low, if a swing low is broken through, which is this one right here, right? It's the lowest low. Let me draw it like this so you guys, because these two lows, let's say like this, right? So this is the lowest low. So until market breaks it, it's called we're in a bullish trend, right? Now, if market in the future makes another big major low and then breaks this high, now the swing low is this. So when market, until market comes down and breaks it, now we have a shift, right? So we need to kind of be able to know which is the major low and which is the swing low and which is the intern low. I'm gonna show you guys now on charts what I mean. So let's see here. Okay. Here. This is this market here. So we have a push up, small retracement, push up, retracement, push down, push down. In this leg right here, right? I want you guys to see this. How many lows do we have in this region right here? So we have this low, and let's say this low, right? So for us to say, right now we're in a bullish trend, right? For us to say that in the future, let's assume price comes down, and let's say it closes here, right? With a candle closes here. Is this considered a shift in the market structure? No. A shift happens when a swing low is broken. So in this picture over here, the lowest low on this retracement is this right here. So when we have a candle close below this low, right? Not the wick, we don't count the wicks. I'm talking about the candles itself. That's itself. So you see how that candle opens right here or closes right here on this bearish candle? Extend that until we come down and close below this low. This is a bullish trend. Once we close below this low, we can now say the market has shifted. We have a market structure shift, break, whatever. And now we can maybe, once we couple this signal with other things that we're going to learn, we can now maybe anticipate market to switch and target lows here and here, liquidity lows, which we're going to talk about liquidity later, right? So that's basically what market structure is, how to identify it. We went over how to identify market structure, what a bullish trend is, bearish trend is, how to identify a shift, right? Fake outs. I told you about fake outs. Not every market structure shift means we're gonna shift in trend. It could be a fake out to just continue higher in the same direction or lower in the previous direction. We talked about how each leg up or down, right, has multiple trends within, right? Multiple trends within. And then we've talked about what a swing low is and a intern low is, right? Or a swing high is and what an intern low high is, right? So here, the only shift will happen once the swing high is broken through with a candle close. Yes, we talked about how a shift happens when a candle close happens. No wicks, none of that funny stuff. Only a candle close to close above or below previous swing lows or swing highs for us to consider that we have a market structure shift. Okay, that's it for today's lecture. Hope you guys learned. Hope you guys found this insightful. Any questions, drop them. And most likely there will be a homework attached to this lecture. Please make sure to do that homework. And until next time, stay safe and happy trading.